Hello everyone, I'm Brooks Page and welcome to our show Money Talks. Today we have a guest on our show that I've known for many years in the banking business, and he's going to share with us a lot of good information that may help us when we're shopping banks and when we're going and looking at different loan products and deposit products and that type thing. Ryan, welcome to our show.
Good to be here, Brooks. Thanks for having me.
You're welcome. Ryan, first tell us a little bit about yourself and your history and what brings you to Hartwell.
Well, Brooks, I was born here in Hart County, raised in Hart County, went to Hart County High School, went to college at Emmanuel College, and got married in 2011 to my wife, Molly, and we've got 3 kids that are all under 6. So
okay.
We're wide open.
Okay.
Started working for First Citizens Bank about 5 years ago, and that's where I work now here in Hartwell.
Okay.
So, yeah.
All right. Yeah. I know that me and you worked together few years back, and I really enjoyed working with you. We'd get out, we'd go see customers, and we'd have a good time. And you're one of the few bankers I know that could understand the underwriting process and had the people skills to really get out there and then make a difference. So
well, I appreciate it. We did have some good times, didn't we?
We did. So what I want to do first, I want to let everybody know the process. Tell us the process from start to finish when somebody comes in and wants a loan, whether it be a consumer loan, a business loan, or whatever loan it may be.
So the first step in the process, obviously, is the application. We sit down with the customer. We try to figure out what they're doing, what they're trying to accomplish, what their goals are. And then at that point, when we find a product that suits, we move forward with an application. The application involves getting personal information, information about income, assets and liabilities, and then we move forward and pull credit and start to underwrite the loan at that point. And depending on the type of loan, that process could be as short as a couple hours or as long as 30 to 60 days, depending on what the product is. So
what's one of the main factors? I know there's a lot of different factors in making a loan decision, but what's probably the number one factor when you make a loan decision?
Well, as you said, there are a number of factors, but one of the top factors is the source of repayment. How are we going to get paid back for this money that we loan out? So we look at that as well as the person's credit, the business credit, and then we also look at the collateral. We look at the loan to value, different aspects of the collateral. Of course, if it's unsecured, then we're a little bit limited on our underwriting process, but those are some of the things that we look at.
That's right. So when people come into a bank, they just go through the process of pulling the credit, checking the credit, the ability to repay. You look at maybe tax returns if it's self-employed, and if it's a loan over a certain amount. So the main thing is you want to make sure that business or that person has the ability to repay that loan. That's number one in banking now, correct?
Correct.
Okay.
Yep.
That's what I thought. So let's talk about shopping around at banks when you want a loan or even a deposit rate on something. What do you look at as far as what do you think you should do? Should you look around at maybe 2 or 3 banks, shopping around, and kind of put some figures in there as far as the difference in rates on loans and what that comes, what that amounts to dollar wise?
Sure. So I think it is wise to shop 2, possibly 3 banks. I think you get to shopping 4 or 5 or 6. You might get a little confused in that process, but what you run into is depending on the bank size and their strategy, the rates could be very different, the fees could be very different. And in the scenario, which we discussed a little bit earlier, where let's just say a business customer wanted to borrow $600,000 on a 15-year amortization. Let's assume for the purpose of this exercise that it's a fixed rate, fixed term. And so if they pay 7% versus 6% at another bank, that 1% savings could be in the high $50-something thousand dollar, $56,000, $57,000 range. So there's a tremendous amount of savings with just a 1% difference, especially on a larger amount of money. Now, obviously, on a smaller amount of money, that savings is going to be a little bit less. And conversely, it works the same way on deposits. If you've got $500,000 to put in a CD, getting paid 2% versus 3%, again, you're talking about a tremendous difference in the amount of return. So,
Right.
And beyond rate, there's other differences as far as service, as far as certain banks have appetites for certain types of credits. So depending on what you do, what your business is, different banks may make a better fit than others.
So mainly the number one thing you might want to advise people to do is at least shop 2 or 3 banks. And, you know, it's always goes back to your medium-sized to larger banks. They usually have, not all the time, but usually they have the lower rates.
Right.
And the sales pitch on your smaller banks is they seem to offer better service.
Right.
And sometimes, but a medium-sized bank kind of fits in where they can offer both. Is that
Sure.
kind of right?
Yeah, so First Citizens we're approximately 600 branches. We have branches in about 17 states, I believe. So we're kind of a medium-sized bank. One advantage we have is that we can offer the better rates of larger banks. A lot of times we're pretty competitive on rate, but also we try to keep a hometown feel to our branches. A lot of our employees, a lot of our folks that work for us are tenured, been there a long time. So yeah, we try to have a good mix of good products and good service as well. So,
You know, there's a lot of different types of loans you can get at banks, home loans, car loans, and those type of loans. But some banks will put, like on a real estate loan, mainly they'll put you on what they call a balloon loan. And
Right.
tell folks what a balloon loan is, the advantages or the disadvantages of putting a loan on a balloon, and what y'all may have to offer if y'all offer balloons or
Sure.
if y'all offer fixed, and maybe some of the dangers of these balloon loans. Balloon
Right.
loans mean that the loan comes due at a certain time. So
Correct.
kind of explain to us a little bit about that.
So a balloon loan, as you said, it typically has a term of, say, 5 years. The amortization or the payback schedule could be longer. So maybe you would have a 5-year term with a 15-year amortization. So the payment would be based on that 15-year payback, but the full amount of the balance would be due at the end of the 5 years. Of course, you could see that there potentially could be an issue with, having to qualify again for that credit. There could be an issue of rate changing. So a balloon loan, it is, in some cases, it's necessary, but it's not always. If you can get into a fixed rate, it's better. And you see in the market with mortgages and with more real estate, consumer type loans. Most financial institutions have gotten away from those type loans and more lean towards fixed rate.
Yeah.
products.
So when you have a balloon loan, does that mean that somebody has to come in when it matures and pay closing costs again? Some closing costs.
Yes.
Tell us a little bit
Typically,
about that.
again, you're at the end of that 5-year term. Again, for this purpose of this scenario, in that 5-year term with a 15-year amortization, at the end of that 5 years, they would need to qualify again. And of course, there would be a new closing to renew that term for 5 more years, let's say.
So if you can avoid a balloon loan, that's probably
Right.
a wise thing to do.
Right.
That's,
You can.
Okay. That's right. So how hard is it for somebody that's new that wants to start a business? I know that it's pretty tough because there's no financial records for
Right.
somebody that wants to start a new business. Tell us a little bit about some ways that they can do that.
Well, as far as starting a new business, you're exactly right. It's difficult for banks to extend credit to new businesses because we don't know we could look at projections, but ultimately we're looking at historical cash flow. So again, it is difficult to extend credit, but one way that folks can get their business started is through programs like SBA, where there's government backed and government partnered loans where they partner with a bank to make a loan to a new business. Also here in Hartwell, there's a city revolving loan fund which some businesses have utilized, which is a really neat product. You could probably get with Jason Ford. Some of the DDA folks could direct you in the right direction on that. But
Right.
yeah, those are some opportunities, and I think one of the biggest things that we see is folks who start a business with some cash reserves
Right.
usually end up being more successful. So that would be kind of
Right.
a recommendation that I would say if you're starting a business, make sure you have significant, cash reserves to start,
Right.
so that you don't get into a trouble situation down the road.
That's right. That's a good idea. So tell us about the local market here in Hartwell. We know it's getting better.
Right.
A lot of building going on and a lot of new industries coming to town. So tell us a little bit about that.
Yeah. From what I've seen, we tend to be a little bit behind the Atlantas and the Greenvilles of the world, but we're definitely seeing some good, solid, healthy growth. As you said, building is on the move in a positive direction. We're seeing new businesses open. We're seeing folks expand their current businesses. So it seems to be pretty healthy out here in the economy.
Oh
So,
yeah. I think it's doing real well. A lot of people want to know about credit, how to start credit, what things they can do to improve their credit.
Right.
So let's talk a little bit about that and explain some things that they can do if they have a low credit score to improve their credit, or if they're just getting started, what they can do to get credit started, those type of things.
So, as you know, Brooks, credit is vitally important in today's world. It's very important. Most companies pull credit when you get insurance, pull credit when you get a cell phone, when you get power utility services. So credit is extremely important.
Yeah, a lot of them will pull credit before they hire you.
They will.
Employers will.
Sure. So having a good credit file is important, and there's a set system and way that a credit score is determined. And I don't want to get into all the details of that because it is a bit complex. And to be honest with you, sometimes we scratch our heads and wonder how these things are scores come about. But ultimately, the biggest thing is as you get older and as you continue to pay your liabilities on time, your score should get better. One of the pitfalls that I see a lot is excessive debt. And so unsecured debt, high balances on credit cards, those things will really make your score drop. So I always recommend to folks, and I think you could read online, Clark Howard's and any website, Credit Karma, that helps you with credit. They all say that keeping a balance of less than 30% on a credit card is ideal.
Yep.
Anything over that, you start to hurt your score.
Yeah.
Also, again, beyond making payments on time, another aspect is sometimes folks will get a loan and pay it off in 6 months. What happens is that credit file only stays on there for 6 months. You have 6 months of payment history, where maybe it was on a 4-year term. So I always recommend, it does cost a little more in interest, but if you're trying to build your credit, pay on that loan for the full term so that you get the full benefit of the payment history. And as far as starting credit, in previous times you could go to a banker and just get a loan with or without credit on a handshake if they knew you. And today it's not that way.
Yeah.
So the best thing to do is to get either, number one, get a co-signer, have somebody has good established credit. Also, another way that we discussed before is that you could open a CD and you could secure a loan with a CD and then use the money that you get from the loan to pay the loan back instead of spending it.
That's right.
So that's a good way to get started.
That's one area I don't think a lot of people know about, how they can get that started.
So if you go to a bank with, let's say you had $2,500 saved up, and you opened a bank CD with that $2,500, you could then turn around and get a loan for a percentage of that amount, or in some cases 100% of it. And then I would just recommend putting that money in a separate account and allowing the payment to draft, and that begins to establish your credit. So that's a good way to get it started as well.
Or in some cases, you can take the loan proceeds, and instead of giving it to the customer, you can buy a CD to secure that loan with for somebody who just has no credit or doesn't have anybody that would co-sign with them.
Right.
So you can do it that way.
Absolutely.
Okay, I want to talk about something that's always been an interest to me, is loan goals and sales goals in banking.
Right.
All banks have it. To me, it's always been when dealing with money, having sales goals and dealing with people's money has always, to me, been kind of a conflict of interest. But on the other hand, you got to have goals to get production out of your employees. So it's
Right.
kind of a mixture with me. I know that a lot of people may know about one of the larger banks that had got in trouble with the high pressure that they had put on a lot of different of their employees about making their sales goals,
Right.
which in turn made them do some stuff that they probably shouldn't have done, by opening accounts they shouldn't have opened and that kind of thing. So excessive sales goals can put pressure on frontline employees that
Right.
can make, just talk to us about making sure that when you go into the bank that the banker's trying to do what's in your best interest and not trying to sell you a product or a service.
Right. So, yeah, there's recently been a lot of publicity, unfortunately, for banks because of one or two that have done some things that were outside the line, so to speak.
Right.
And the way I look at it is sales goals are this accountability.
Right.
You have accountability in any job.
Right.
You have certain expectations, and so banks do need to have those goals in place to keep employees accountable. But our approach is that, our goal is to provide better banking to help people live better lives.
Mm-hmm.
So with that being said, we're only going to offer a product or a service that fits your need. Mm-hmm. Our goal and our job is to understand your financial situation and understand your needs. Mm-hmm. So I think for folks who are shopping banks, if you pick up on pushy sales and
Mm-hmm.
they seem to be pushing you in products that you don't need, that would probably be a red flag for me. But what we try to do is maybe make customers aware of products that they're not aware of mm-hmm. that could fit their situation mm-hmm. and help, because our job is to advise you financially. So I think just drawing a line between folks who are trying to sell you a product that you probably feel like you don't need mm-hmm. and being pushy about it versus educating you on what products are out there and how they may be able to help you. So we always try to
the main thing is to do what's in the best interest of the customer
Absolutely.
and not the bank.
Absolutely.
And I think that's what
Absolutely.
Okay.
And that is our responsibility. We hold a high standard at First Citizens, and I know a lot of other banks do as well, mm-hmm. that we are only going to do what's best for the customer.
Yeah.
So
yeah, I've worked in my career with a lot of different bankers, and I know that one of the main things that a lot of bankers tend to not like to do, and some of them like to do it, I know you like to do it, is you like to go out to the business owner and make outside calls. I know like I said earlier, me and you we did it before. We had a good time doing it.
Absolutely.
But a lot of bankers don't like to get out of the bank and do that. But you do, and I've worked with some other bankers that do. So you'll get out and go see the customer at their business and talk to them one-on-one. And that means a lot to a lot of customers. Tell us a little bit about what you do and that kind of thing.
So my career, I started before I worked at the bank selling insurance, and it was a lot of outside sales calling. And what I learned is that people like to feel valued. And when you go face-to-face to meet somebody and you introduce yourself and tell them what you do and how you can help them, they appreciate that. Because as you said, it's pretty uncommon in today's any financial services industry. It's pretty uncommon. It used to be very common, but it's pretty uncommon today. So I think folks appreciate that. And I feel like, at the end of the day, you can get basically any product or service at any bank. But what can separate me from somebody else may be that I can go out and spend time with my customer and get to know them and be interested in their life. It's beyond selling a product or a service. I want to do that because everybody has banking needs, but getting to know them and getting to know about what's going on in their world is really important to me.
Yeah, I know when me and you used to call on customers, some of the last things that we would even bring up would be banking.
Right.
We mainly got to know them.
Yeah.
And it was a fun process, and we got to know the people, and then we eventually got into the banking. But and that was a fun experience, and usually that was a successful experience too, because we would end up opening accounts, doing loans.
Right.
But you have to get to know people, and they have to get to be able to build a trust to you. So
and really from the bank standpoint, it really helps you as a banker to get to know that person, because you can understand the things about their character, things about how they operate their business that will really help you if you do get to that point where you start a banking relationship and may have, credit requests or things like that in the future. It helps you to have that relationship established, because there are certain things that are not on the sheet of paper where you go check the boxes that you need to know about a person and how they operate their business that'll help you, that may be able to help you get an approval on a loan that you may not have otherwise gotten.
So getting out and calling on customers is a great way to meet people and for
Absolutely.
you to get their deposits, maybe their loans. And
Sure.
I know you're not one to be scared to do that.
I enjoy it.
That's good. You had told me earlier before the interview that First Citizens holds a unique designation. So can you kind of tell us a little bit about that?
So First Citizens is the largest family-held financial institution in the country. So, there's other family banks around, but First Citizens is the largest. And that's kind of a unique scenario for us, as I mentioned earlier. I think it gives us the ability to offer products and services that other big banks can offer. But it also gives us the hometown feel and the family value system that a bank should have, in my opinion. So we're kind of unique in that way.
So, we were writing some questions down before the show, and here's one that is kind of, I don't know the word for it, but it's kind of a cliche type question that I normally don't like to ask, but I'm going to ask it. Why do people want to bank with Ryan Winnie?
Well, that question's been asked before, and I think I'm definitely not the smartest guy around.
Oh, come on.
But I do work hard to help the customer, provide services that'll help their business, that'll help their family. And I think the biggest thing that I can provide and that we can provide as a bank is service and know-how. We have a lot of resources. We have a lot of good people supporting us, and you're going to get service.
Right.
We go see our customers, we talk to them, we stay in front of them, and build relationships. And ultimately, like I said before, you can get a checking account at any bank. You can get a loan at any bank. And so what we have to provide is something that's a little bit intangible, and I think that's where we can kind of separate ourselves.
So is the area you work just the Hartwell area, or do you work different other counties, or do you work just in Hartwell?
So now I'm covering Hart County, Franklin County, Stevens County, and Madison County in the business world. So we have a great branch here and a great staff there, led by Vance Foster. And here in Hartwell, and that's where my office actually is. But I cover those 4 counties.
Right. So banks all offer different products and different things. I know that we talked earlier again about the smaller banks will try to sell your service, and then your medium banks they're usually better on the rates. Not always, but they're usually lower on the rates. Let's talk about CD rates, and everybody knows how low these rates are. So, as we both know, FDIC, they'll insure up to $250,000, and there's other ways to insure larger amounts of money. But what other options do people have if they want to try to get a higher return on their money? And I know when we talk about this, these areas are not guaranteed like bank deposits and CDs, but as First Citizens offer any other alternatives, of course, on a lot of these, you can make money and you can actually lose money when you get into talking about different investments. So can you talk a little bit about that?
Yeah, First Citizens does have an investor services department, and we do have a financial advisor who can offer all types of products. Of course, stocks and bonds, mutual funds, annuities. There's all kinds of products that they have, but those products can in some cases get you more interest than a CD. And the thing that I think is cool about it is that there's based on your risk appetite, how much risk you like to take, there are products and suites of products that will fit every risk appetite, from extremely conservative to very risky. So there's definitely a lot of products on the investment side that can help folks earn more on their money.
Yeah, bankers always have to be careful talking about that because
Yeah.
you can lose money in some
Right.
of those. So
Right.
it's not a guarantee that you're going to make money.
Right. They're not. Most of those products are not FDIC insured, and they're not guaranteed rate. There are some guaranteed rate products, but
That's right. That's right. Okay, what are some indications of a strong, healthy business from a bank perspective?
so there's a lot of aspects, that we look at, and one of the primary ones that I look at is, we talked about earlier, cash flow, and it's you got more coming in than you got going out essentially, and it's just like a personal budget. You like to see a business that's healthy enough to service debts, but also to have excess cash when debts are serviced. So that's kind of, to me, the number one indicator is a business who has more coming in than going out. So that's a big thing, and of course it goes back to what we talked about earlier. That one of the top things we look at is how are we going to repay a loan? How will that loan be paid back? So that's a strong indicator there.
That's right. Well, tell us what you see out there in the market as far as real estate prices. Are they, just observing?
Yeah.
Are they kind of just panning out? Are they increasing? Or the value increasing? Is it? What's the situation there?
It seems to me that the trend for the last year and a half to 2 years has been an upward trend. Seems to be leveling out a little bit now, and I think the market's kind of telling us that prices are probably where they should be. And I know you can read about Atlanta and bigger cities, prices are probably a little overinflated, but I think here it seems like they're right where they should be.
Yeah. Okay, Ryan, one last question I'd like to ask you. There's a lot of regulation in banking, a lot of laws in banking.
Sure.
When somebody comes into a bank, they need to know that the banker's job is to make sure that they run the application, check credit, and go through the proper process. So make sure people understand that that's what you do when you go into a bank, is you go through that process. So talk a little bit about that. I know there's no more of the good old boy banking where you turn people down just because you don't like them or just because you don't trust them. Mm-hmm. Those days have come and gone, and there was strict regulations against that kind of thing.
Right.
So tell us a little bit about that, if you don't mind.
Yeah, I've had a lot of folks come in my office when I worked in Livonia and Carnesville,
Right.
and tell me stories about making a loan on a note, on a handshake, on a napkin, and as you said, those days are gone, and it's really good for the customer. It's good for the consumer because the regulations are in place to protect the customer and to make sure that everybody has a fair shot at getting an approval on a loan. So we are required by law that if somebody comes in and requests a loan, we have to go through the same process for everybody.
Right.
So we can't make a loan decision without doing an application. And it's a good thing because, again, it protects the customer and it makes sure everybody gets the same opportunity for a loan.
It keeps bankers from saying, well, I just don't like you, Ryan. I'm going to turn you down.
Fortunate
I
for
just
me.
don't trust you. Yeah. So those days are gone, thank goodness. Anyway, I want to wrap up our show. I want to thank Ryan for being with us. Ryan, thank you for being on the show.
Yeah, thanks for having me.
If people want to get in touch with you, tell us what they need to do, how they contact you.
So my office is here in the Hartwell branch, right across from the Chevron station. I'm there a lot of times. Also, they can reach me by email. My email is Ryan, RYAN, .Winnie, WINNE, at firstcitizens.com, and that's spelled out.
Okay.
So.
All right. Well, thank you, Ryan, for being on the show, and we'll see you next time on Money Talks.